70% on Wish call options. If analysts are correct, that could very much be the case. But first, who's Wish anyway? Wish was founded in 2010 and they're based in San Francisco. They're an online e-commerce platform that facilitates transactions between buyers and sellers. I would describe them as a gamified version of Amazon selling mostly cheap goods from China. And if you look at their website, they have a lot of kind of gimmicky things like a countdown clock to unlock lower prices, unlock discounted products with a spin of a wheel. It's kind of gimmicky in my opinion, but hey, to each their own. All right, so let's jump into the stock. Currently, it's trading for $11.40 a share. And according to analysts on Yahoo Finance, it has a 12-month price target right around $18.44 a share. Similarly, on tip ranks, they have it pegged closer to $18.60 a share, which is roughly a 63% upside, which is pretty awesome for this stock. Taking a look at the volatility of the stock, as you can see, there's been a lot of movement the past few weeks here in early and mid-June. What happened looks like Wish got swept up in a lot of the meme stock stuff that was happening earlier in the month. Looks like it's trailing off a little bit, so maybe the option prices will be a little bit more favorable now than they were maybe a couple weeks ago. This may be a slightly better buying opportunity than a week or two ago if you're looking to jump into this stock and buy some call options. So jumping into profit predictions. I like using Option Profit Calculator. There are a number of other tools you can use. Maybe your brokerage account has a calculator that you can use for this sort of stuff, but I like using this. It's pretty easy to use and it kind of looks cool. So first getting started, I say that I typically like to buy longer term call options or leaps for a number of reasons. One being there's longer time to recover for any losses. So if I were to buy this call option and for whatever reason it tanks or goes down, it gives me enough time to rebound and hopefully reach profitability or at least cut some of my losses. I also prefer to buy in the money. It's just way less risky than buying right at the money or out of the money. But everyone's different. You have your own risk tolerance, so keep that in mind. But I'll show you in a second the profit potential differences between being in the money, out of the money, and deep in the money. So let's get started. So I'm going to select the December 2022 $5 strike price. So we have this calculated. And if this stock were to reach $18.50 a share, which is close to the price target mentioned earlier, we're looking at right around a 73.1% upside on the call option contract at expiration. And of course, if it hits that before expiration, even better. But I like to use the expiration date just in case for whatever reason I had to hold this option contract to the very, very end, which I more than likely would never do. Gives you a good idea of the potential upside or downside to a call option. So usually what you want to do is buy a call option at the mid price or better. But let's take a look at the same option at the ask price. So with the same stock price hitting $18.50, still get a decent gains of 66.7%. Now let's take a look at the strike price that's closer to the current share price, not at the money, but much closer than the in the money target I had before. So now you can see that the upside is only 33.9% if you were to hold to expiration for this call option. I mean, in that case, it's probably best to just buy the shares versus a call option, but I like to show you the difference between buying in the money and buying something at the money or out of the money. So it's roughly about half the gains you'd expect if you were deeper in the money. All right, so final thoughts. Well, based on the price target, I think the upside is fantastic on Wish options. I like to see this meme wave kind of die down to see maybe these option prices would become a little bit more reasonable. You can pick something up for a cheaper price than it is today, or at least cheaper than it was a week or so ago. Now, if you happen to buy it and let's say for whatever reason this gets swept up in the meme stock whirlwind again, I would take my wins, sell it, wait for it to drop again, because most of the time inevitably does, and then rebuy my position at a lower price for the same or longer if it's available at that time, call option. And there you have it. Well, thanks for watching, and please subscribe.